My portfolio is closing in on £20,000. I'm sitting at around £18,800. And in this video, I'm going to take you through my entire portfolio on Freetrade, on Trading 212, and the consolidated version on my spreadsheet. I also received a ridiculous amount of dividends this month, so I'm going to take you through all of the dividends I received and the buys and sells that I've made this month. Let's get into the video. This is my portfolio on the Freetrade app. I'm sitting at around £12,600. This is the main bulk of my portfolio, and the other part of my portfolio is sitting on Trading 212. I'm just going to take you through some of my positions. Total return for this portfolio on Freetrade is around about £2,300. This month, my portfolio is flat, pretty much, only up about £15. Realty income, my biggest position in this portfolio, is about £2,200. Now it's around about 1.7% up. Now this stock has actually performed quite well over the last few months. It's actually up about 20% in the last 3 months, but this month it's actually only up about 2.4%. Now I do expect realty income to perform quite well over the next 1 to 5 years, simply because of interest rates coming down. And if interest rates come down really quickly, then I expect that this company will outperform the rest of the market. This stock in particular, I've actually overbought into the position when it was in the red. Around about this period, I was buying every single month. And this month I've actually added a few more shares to the position, simply because I do expect it to continue going. The next biggest position is VWRL. Now this is my biggest position in the entire portfolio, but I've only got 13 shares in Freetrade. Now it's actually up about 14%, which is pretty good. This month it's actually been quite flat, up 1%, but I do expect that the all-world market should just continue to go up over time. Like I said, in this portfolio I've got 13 shares, and my average price per share is sitting at about £91.50. The next position is Unilever. Unilever is one of my bigger positions simply because of the gains that's been happening over the last year or so. It's actually up 20% in the last year, and overall it's actually up 27%. I do think I want to continue adding to Unilever because it's quite a good core position in the portfolio, simply because of the safety that it gives. It pays quite a good dividend, quite good dividend growth as well. I do expect to just keep it in my portfolio for a really long time. And then the next position is Microsoft. Microsoft I've held in this portfolio for around about 2 years now. So the position is up 53%, but if I convert to dollars, I'm actually up 84%. So my average price per share is $231, and it's currently sitting at $427. I did buy at a really good time, quite lucky actually, and I haven't really added to the position in quite a long time. But if I do see price dip, which I'm hoping for really, I will probably be adding more to this position along with my other tech stocks. GSK is my next stock. It's currently up 12% overall, but this month it's actually had quite a bad month, down 7.5%. Now that's quite a big drop off. Some news come out about some job losses, and they've had some bad press around some of their vaccines. But in reality, I don't think there's anything to worry about with GSK. They're very cyclical. As you can see from the last 6 months, it's been very up and down. And even when we look at the last year, it's even worse. I do think it's a good company to hold. They pay a good dividend. Yes, their dividend is quite cyclical due to the nature of the sector, but they will probably keep paying a good dividend, and I'm hoping that their stock price will actually grow. Pepsi is my next stock. Pepsi has had a very bad time recently, I think mainly due to cost pressures. There's a lot of news coming out around the whole thing of Dr. Pepper overtaking Pepsi, which I think is a bit ridiculous. It was around basically more people preferred Dr. Pepper over Pepsi, which I think is a bit of a lie, or it's just silly Americans, but they've had a bit of a tough time, down 1.5% this month, and in the last year they're flat, which isn't great. And I think my average price per share is just a bit too high. In dollars I'm down 1.5%, but in pounds I'm down 8%, which isn't great. They pay a reasonable dividend, they have dividend growth, pretty good dividend growth for the sector. In reality, I'm hoping to keep it in the portfolio. I don't really want to sell it. It's just that when you see red, you always think you just want to get rid of it. The next company is Google. Now, obviously, Google, tech company, there's a lot of news around whether they're going to get sued for being a monopoly. You know, they've got all the different areas that they own, and they're quite a big company. They have a lot of market share in a lot of sectors. Regardless of what happens with whether they get sued or whether they get told they need to split their companies out, I do think it's good for shareholders. It might affect their stock price a little bit, but if you're a Google owner, you happen to own some of search, you happen to own some of YouTube, you've got cloud, if they get split out, you'll have your hand in all those 3 companies as well. So in reality, it's a good company to hold. If anything, the news on there being a split could be actually a good reason to buy into the company. If a company like Google gets split out, they could actually turn them into three very efficient companies, which could in turn produce more return for shareholders. So yeah, it's something to look out for. Most of big tech has been affected over the last few months due to many different things. But you can see, if we look at this chart here, there's been a little bit of a bounce back. So with interest rates coming down, hopefully we see very positive stock market returns over the next few years. Next one is SSE. Now, SSE, they were doing really, really well. They actually had quite a good run up in September, and then there's a big drop off. The reason why there's a bit of a drop off, interest rates were held at 5%. That is going to negatively affect companies with a lot of debt, like GSK, like we just saw, and with SSE. I was hoping that interest rates would just continue to come down because we'd see good stock market returns for these big companies with a lot of debt. It just provides you with that extra few percent to take as a benefit to invest. I think we will see interest rates coming down. Like, it's happening now. They're not just going to start raising interest rates again. And yeah, it might be dragged out a bit longer, but over time they will be coming down. So I wouldn't be worried about the negative stock market return over the last couple of weeks. It's just people getting a bit worried about interest rates. And then my next position is Lloyd's. Now, my position in Lloyd's is up 30%. And you can see it's been pretty flat over the last month. The stock was seeing some negative return leading up to the interest rate decision, and that they held it at 5%, meaning that banks are going to benefit a little bit longer with these higher interest rates. Lloyd's has had a really good year, up 34%. I don't expect these kinds of returns to continue, but banking returns hopefully will be reasonably okay over the next few years. With interest rates not going to zero, they might be higher for longer, like they keep saying, or at least a very gradual decrease in interest rates. Banking should be able to benefit from that for a longer period of time. And also, when we see more and more good financial results come out, as the quarters go by, or as a half yearly goes by, or the years go by, we should see some good returns for the previous years, and then we see positive stock market results. I don't think it's time to sell banking stocks yet. But there will come a time when it is potentially better off to sell the banking stock rather than holding on to it and seeing the red over those next few years. And then my next position is Tesco. I love Tesco, the best supermarket in the country. They've done really well this year. They've been holding on to their market share and actually increasing their market share, up 36% this year. I think that's mainly because they've been dealing with the cost pressures better than all the other supermarkets. When you ask someone where they shop, most of the time they're going to tell you Tesco. They might shop at Sainsbury's, they might shop at Aldi or Lidl, but more often than not, they're going to be going to Tesco. It's going to be pretty tough for Tesco to be beaten. They do pretty well on most things. Yeah, you got to have a club card when you go shopping, but at the end of the day, a lot of the supermarkets are doing that now. My Tesco position up 44%, 43.65%, doing pretty well. And then my final stock in this portfolio is Amazon. Now, Amazon I've held, again, like Microsoft and Google, I've held them since October 2022, and I've had some pretty good returns. So I'm up 57% in pounds and up 82% in dollars. So I bought at $100, and it's now $187, doing pretty well on those. Amazon is probably the one out of the three stocks. Out of my Google, Microsoft, and Amazon, I'd probably more likely buy Amazon. I do see Amazon more as a long-term play. Like Google, they've got their foot in every single place. But Amazon, I think there's a bit more upside. I'm not going to talk you through my dividends just yet, but if you want to pause the video, you can have a look at it right now. The two additions I made in this portfolio was 2 shares in Realty Income. Now, this was just because I had a bit of cash and I want to keep adding to Realty Income. And usually it's just because I'm getting rid of the cash that keeps building up because of the dividends that I received. I don't auto reinvest my dividends, so I like to choose where I'm going to put it. And I just decided to put it into Realty Income this month. Trading 212. All right, so now we're in my Trading 212 portfolio. My portfolio is sitting at £5,187. Total portfolio is £6,173. That difference is the cash in the portfolio. So it's sitting at just under £1,000 in cash right now. Total return is £189. I think when we did this last month, I was only up around £100. So I've had a bit of return this month. It's hard to show on Trading 212. That's one of my gripes. That's one of my things that I dislike about Trading 212 is that it doesn't show return like when you click on the graph, it shows you the graph, but it doesn't show you the return. You know what I mean? Anyway, 4 stocks that I hold in this portfolio are the Franklin FTSE India ETF, Rolls-Royce, VWRL, which is just more of what I had in Freetrade, and Visa. So if we just take you through each one of these. So Franklin FTSE India ETF, up 2% this month, pretty decent. I did a bit more into this position this month. So if we look at the history, I bought 4 shares on the 6th of September for 142.78. So I added a little bit more to the position simply because of this sell-off right here. I added a bit more in this dip. I've had a bit of benefit from it, probably a few percent. You know, I bought it at around 35 and now it's at 36. Pretty decent. Next one is Rolls-Royce. In the last month, up 5%, pretty decent. I added a bit more to my Rolls-Royce position this month as well. So if we go down to the bottom and we go to history, you can see that I bought £300 worth of Rolls-Royce on the 2nd of September. And if we have a look at roughly what happened on the 2nd of September, there's a bit of a dip. So I've had a little bit of benefit from that. Again, they've seen a bit of a spike this month, which is pretty good. And this year they're up a ridiculous 137%. I bought quite late, as I just showed you. I bought in May and July, and I've added a bit more in September. And then the next one is VWRL. So I've got 17 shares in Trading 212, with the other 13 shares being in Freetrade. So my position is up 2.2%. I think last month it was down a little bit, but overall that's beneficial for me. And I got paid a dividend from both of my portfolios from VWRL this month. And then my last position is Visa. So I've got 8 shares in Visa this month. It's been a bit shaky. It's had a bit of a drop off at the end of this month. So interest rates coming down, which I thought would be beneficial for Visa, but it does mean that, yeah, it's weird. I'm not sure why it would be negative for Visa. But there's also the fact that MasterCard is being sued by the DOJ, which is negative for Visa if Visa also could get sued as well. It's to do with the monopoly on payment systems. So if MasterCard do get actually something taken to court or having to pay a fine or whatever it is, or even split out, Visa again could be affected by that. So that's some other news against Visa. But it's a good time to buy into Visa. I think Visa is a company you can buy at any price. And there's been a bit of a drop off this month by, what is that, like a few, maybe 1 or 2% from their peak anyway. But Visa, I added to this position twice this month. So I bought 2 shares on the 11th of September and the 26th of September. So if we just take a look right around this drop off here, I believe I bought when it dipped there right before it spiked back up. And then I bought again on the 26th, which is all the way down here. I bought at this low right down here. So yeah, I do believe in Visa. I'm going to continue adding to this position. It is actually one of my bigger positions now, sitting at £1,600. But yeah, I'm going to continue adding. Now let's go take a look at my portfolio, all consolidated together on my spreadsheet. Okay, so this is my portfolio on my spreadsheet. As you can see, my total value is £18,777. Sitting at, it's about £18,800. That's made up of the portfolio value of £17,781 and the cash at £996. It's better to see here. So you can see I've invested £15,700. I've got market gains of around about £2,100. That gives me my market value, £17,700, the cash in the account, and then the portfolio value of £18,700. I have total return of £2,591, which, like I said, is the gain of £2,100 plus the dividends of £500. My portfolio is made up of 42.8% US stocks, 36.1% UK stocks, and 21.1% ETFs. Last month, it was sitting at around 19% ETFs, so I've added a bit more into the ETFs this month, which I'll show you what I've bought. And as you can see here in this pie chart down here, VWRL is the biggest chunk in this pie, about 18%. And then my next position is Realty Income at 12%. Then it gets smaller and smaller as it goes around, with Visa at 9% being my third biggest position. Looking at this bar chart here, you can see that most of my stocks are actually in the green, barring Visa, down very small amount, and then Pepsi down 8%. It's very good to see like that I have quite a few big spikes here, but it's understandable that not all of them are actually doing really, really well. But you can see that this is the 50% mark, and I've got 2 stocks above the 50% mark and one just nearly touching the 50% mark. So if we now take a look at the dividend dashboard, some things have changed this month. So I've now in my 3rd year of receiving dividends. So I received my first dividend in September 2022, and we're now in September 2024. So we're now entering the 3rd year. So in my first year of dividends, I received £128. In my 2nd year of dividends, I received £315. And my first month, which is September 2024, this month, my first month of year 3, I received £66.89, which is actually my biggest month in dividends ever. And it doesn't even include my Pepsi dividend, which I'm due to receive on the 30th of September, which is probably when this video has been released. But I'm making this video before that comes out, and I think I should receive about £7 or £8. So that will put me over £70 for September. We can also see dividends by calendar year. So in 2022, I received £15. In 2023, I received £216. And so far in 2024, I've received £281. So I would hope that over the next 3 months, I will receive more than £20. So I'll be over £300. And potentially, I might be around £350. But I'm not actually sure. I've not actually had a look at what I'm due to receive for October, November, and December. So this is just the info tab. So this is where I've collated all the information. The only thing I really wanted to show was the fact that my VWRL position is now over £3,000, which last month it was around about £2,600, £2,700, and we're now at £3,123 on the dot, which is crazy to see because I haven't had a stock. I've had a stocks over £2,000 for quite a while, but now that they're over £3,000, it's quite cool. It's very cool. And also, it's interesting to see my total dividends is now over £500 in total. So those are 2 little milestones that I've hit this month, which is quite fun to see. So this is the transactions month on month, which allows me to see the buys and the sells I've made, or at least it shows me how much I've bought and sold in each of the stocks. So I've actually put into the stock market this month £1,360. So I've added 2 shares of Realty Income at £92. I've added 4 shares of the FTSE All World ETF, £418 to my Visa position, which is 2 shares. I added £298 to my Rolls-Royce position, and I added £142 to my Franklin India ETF. So this here is the daily dividend calendar. It allows me to see the dividends that I received per day, per month, and per year. So you can see here that I actually received 1, 2, 3, 4, 5, 6, 7, 8 dividends this month, and I'm still due 1 dividend, so it will be 9 dividends, which I think is the most dividends that I've ever received in a single month in terms of quantity and also in terms of value. It's really interesting to see the highest dividend day I've received, and also just to see when I receive them throughout the month or even throughout the year. This tab here is just the dividend calendar, so it allows me to see which companies paid me which month, and it's also good to see the growth that you see in each company. So you can see here with Realty Income, from January I was receiving £5.80 per month, and now I'm receiving £7.69. So if I just take you through which dividends I did actually receive this month. So I received £16.21 from Lloyds, £1.96 from Microsoft, £7.69 from Realty Income, £19.20 from SSE, £9.97 from Unilever, £10.85 from VWRL, and £1.01 from Google. And if we look at my Pepsi dividend I received in June was £7.40. I think I should receive roughly the same this month on the 30th of September. So that should put me over the £70 mark. Now, I do expect October to be quite a quiet month for dividends. So I'm probably going to get one from GSK and Realty Income. I don't think there'll be anything else. So that should be roughly £19 or so for the month of October. So that is my portfolio in total. I've got 14 holdings. My goals here are to hit a £20,000 portfolio, which, not to spoil anything, but I'm pretty sure I'm going to have that as my next video for my portfolio update for October. I expect it to be £20,000 because I still have to add £600 for this month for September, and I'm going to be adding £600 in October as well, which with a little bit of market gain should put me over the £20,000 portfolio. But if it's not, maybe I'll just put that as a title anyway. One of my goals is £100 a month in dividends, but I think I'm going to change that goal. I've been saying that for quite a while, but I've not really thought of any new goals for the portfolio. One of the goals is 10 years of investing. Now that is just a wait and see kind of goal. I'm now 3 years in, so I'm 30% of the way there. But you know, I'll let you know when we hit 2031 if I've been doing it for 10 years. And then my final goal for the portfolio is make an ETF a core position of the portfolio. Now I've put there VWRL 25%. Now I think that's sort of a basic goal. I'm closing in on 25% for ETFs. I think long term it'll probably be around 75% for ETFs. Anyway, thank you for watching this far into the video. If you liked the video, give it a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward? Or if you just want to tell me how your portfolio is doing, how many dividends you received, the market gain, any buys and sells that you've made this month, any advice on investing really. I'm still a noob, you know, leave a comment below and I'll give you a reply. Thank you.